we'll send it to Zoom and YouTube at the same time.
Okay, welcome to the Investment and Benefits Quarterly Meeting. We first have to approve the agenda from the previous meeting on May 9th. Does anyone on the committee have any questions or concerns about that?
No, and I'll make a motion that we approve the minutes from the prior meeting, which
Second.
was May.
Okay, we have a motion and a second. All those in favor say aye.
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 Motion will pass 6-0. Thank you. All right, I don't think we have anything else to follow up on yet. I know we have some items at the end of the meeting, so I'm going to turn it over to Soltis and let them go over their section. Thanks.
Okay, thank you, Ralph, and we're glad to be here. Good to be here in person, and grateful we've got a couple people online as well. Our Chief Investment Officer, Bill Wallace, is joining us online, and we'll have him take a few minutes as well. So in terms of the agenda, you've got that up in front of you. We'll cover quickly the some of the fiduciary training items and some planned governance. Quick update there. We've got Bishop Bastion on the line with us with Voya, just to provide a report from Voya's end and kind of a summary wrap up of the transition that's happened there. We also, you'll see on there, I know you have it, Ralph, under the agenda, but Voya's taken that ERISA account kind of journal or worksheet. We've gone through that with them, and they've basically replicated that kind of in Voya's template a little bit, but they'll help us, and we'll continue to keep track of all of those funds and expenses for the plan going forward. And then we'll, of course, go through an investment review of the plan and finish with both the kind of a summary of the participant support and education that happened pre-transition and also what we have on dock for the remainder of the year. So as always, a busy agenda, but is there any other items that the committee that's not on the agenda today? I know Ralph, you sent us yours, but anything else that we need to add to the agenda this time?
Yeah, I just noticed that the items under Utah County are actually from the last meeting, and they didn't get updated. So as I recall, what I had on there was, I don't know if you still have that handy, Tucker, the last email I sent you. It probably just got missed. We're not going to review the risk expense budget. We're not going to talk about the benefits, broker RFP. We are not going to talk about Workday payroll integration, but I did want to talk about the expense for the implementation. We have some fees we can get from Voya that we need to talk about, and I'm just going to double check my email to make sure I'm not forgetting anything.
Sorry about that, Ralph.
No, it's fine.
We probably pulled and formatted and then pulled an old copy or whatnot, but we'll get that agenda resent with those items in there as well.
You can just give me 1 second. I'm going to make sure I'm not missing anything.
Mr. Chair, I do have one item.
Yeah.
If I could. I did notice on the committee, this is Rob Moore. Did notice on the committee it references Darlene Higgins. She's no longer on the committee, as I understand it, and Lieutenant Yvette Rice is now on the committee.
Okay, so
And she's here to keep us in line, right?
we will get that.
And it is here on the agenda. But I
Sorry, it
don't know
must
what
be
you-
in my book that I have here. It shows Darlene, but apparently the
So
agenda
if you
has...
see the agenda I set on the 4th, it has those changes on it.
Okay,
Yeah, it does.
perfect.
The one I printed out does, so
I must have an old copy. Thank you.
that's true. I didn't check in the book here.
Okay, we'll make sure we've got that updated as well.
And I think I actually think everything else is fine. It's just those couple of items under Utah County items, and of course the vet needs to be added.
Okay. We'll just add as part of the notes for today, we'll add as part of the notes the fiduciary training that was conducted prior to this meeting. So we'll make sure that's documented in terms of the noted in the materials, those in attendance, as well as the material that was covered in that. So we're excited to welcome a couple of you that are newer to the committee and happy to take some time with you today. And that we appreciate the time earlier today to go through some of those items. So. Okay, I'm going to jump in and have Tucker, if you want to go down to the business calendar, let's start there. And we can kind of talk through what's gone on so far this year and then what we've got again on the docket for the remainder of the year. I'll let Tucker kind of take us through that before we jump into the dates for training and et cetera.
Yes. So while we meet on
Page 8.
Yep, this will be a page 8. The 2022 business calendar for the county. So while we meet on a quarterly basis, this is just a summary of what's going on in the meantime whenever we're not meeting. So we won't cover everything, but maybe just to make a few highlights that we are noticing. So we've got the successful transition of OYA is worth noting. We know what happened in May, and we just continue to have ongoing education efforts to make sure employees are getting questions answered and meetings set up. We do have a meeting scheduled, not set in date yet, but we will have additional training on the Voya website as a ongoing basis to help with the website and the transition. So overall, we're really pleased with how it's gone. I'm sure you are all happy that it's mostly over. As a reminder, Zoltis sits on a few boards, government and different entities like Fidelity, Schwab, and Prudential to go over upcoming legislation. A few weeks ago, a few of our members were at a conference that helps legislators with upcoming laws and changes. One that was heavily discussed and we'll review a little bit more today was the Secure Act 2.0 and how that'll affect the plan. Tyler will give just a few highlights of what that'll mean for the plan. It's gone through Senate, right?
Yeah, there's actually 3 bills. So Secure Act 2.0 is one that's been passed, the House actually, sitting with the Senate. And then there's a couple of more bills that have been proposed. We think you'll see, we've been talking about these for probably a year and a half, but I think they are getting close to getting these. They're looking to combine them and then get them through. But so there's a Rise and Shine and then what's called the EARN Act. And all 3 of those have different kind of components, but right now they're basically sitting at the floor of Congress, and there seems to be very strong bipartisan support for them. So right now I think it's a little bit more of a fleshing out a few of the details between the 2 parties, and then likely attaching it to a larger bill that will likely get passed at some point. They're shooting. I think the Government Affairs Committee that we sit on with NAPA, they're hopeful to see this pass at the end of the year, before the end of the year, but it may take a little longer. We'll see. There are some things that what I will say is that'll be a very significant change in legislation for retirement plans. There's some pretty big provisions in there that will have an impact. I don't think most of those, a lot of the big stuff is for newer plans. One of those is a mandatory make plans off, make organizations offer a plan and make them do auto enroll. So there's some, so in terms of Utah County, I don't know if it will have as big an impact on you all, but for lots of retirement plans out there that aren't auto enroll and other things, it could be one of the biggest pieces of legislation and changes that we've seen in a while. So we're keeping obviously very close to it, and we'll when that happens and where things fall, there's obviously still some things in motion. We'll make sure that we communicate, what's going to happen there. But like I said, right now you got 3 different bills. They're similar in nature on all 3, but there's some different provisions among each of them that are still being negotiated back and forth.
Yep, perfect. In that same vein, so we touched on this last time. We'll cover it a little bit more today. The DOL released some guidance around cryptocurrency and retirement plans, and so it's a little 3-pager that we'll be reviewing, but it's just as a good practice to go over as a committee. Going over the investment review section updates. So if you go down the 3rd quarter column, We keep track of what funds are on watch and which funds are beating their benchmarks by at least 1%. So the funds that are on watch right now is there's currently 2, and we'll be reviewing those today. And then the manager highlights there are currently 10 funds within the plan that are beating their benchmarks by 1%. And so we're really pleased with that. Over on the right-hand side, you can see, just as a good way to summarize and bring apples to apples, the average access return. So these are the amount that the funds are bringing on a 5-year rolling window above their benchmarks is bringing about 1.88% above their benchmark, which we think is a pretty good indicator. And this is net of fees as well. So it's a significant number right there. And then managers being their benchmark, we see that 86% of our managers in the fund lineup are beating their benchmark. So it's just a good way to kind of bring comparisons down. And we'll talk about this, finally, the education efforts that are going on. Maybe just one thing worth highlighting here is in 2021, we had about 135, give or take 10 meetings that we were able to meet with on an individual basis. Right now, we're at 138 year to date. We think big reason for that is the conversion, the additional education we've been offering, and also adding another advisor to the plan. So we just see the demand is there. It's good to see that individuals are signing up for these meetings as well. So, but we'll cover a little bit more of the education if we got time at the end. Are there any questions from the committee so far on the business calendar, what they see there?
No. Thanks.
Okay. I'll just update on a couple of things, and then I'll have Tucker take a minute on the cryptocurrency guidance that the Department of Labor put out earlier this year. We'll do that briefly, but I think from a fiduciary standpoint, we have November 10th slated. That'll be our 4th quarter fiduciary training that we'll plan to do. Tentative time for that, so it's the date's set, November 10th. Tentative time for that is 10 to 1. And we are hopeful to be back in person like we've done historically, but there will also be a Zoom option for that meeting as well. And like all of our fiduciary trainings, we will plan to record it so that any of those that are not able to attend that day can still access it and participate in it. Kind of talked about the Secure Act 2.0 that's there. Again, a number of different provisions right now up in the air, but I think we'll fully anticipate something passing by the end of the year, first quarter of next year. And then I mentioned this was in the fiduciary training that we did earlier today, but this past quarter we were certified by CEFIX again. This will be our 10th consecutive year. I mentioned to those that were in attendance there that CEFIX is a third party. They come in and audit our firm because we act as a fiduciary on your plan. And that audit, the purpose of that is to make sure that we are following best practices and that we do not have conflicts of interest and that we are providing the services that are laid out in our contract with you all. And I mentioned to the committee, CEFIX has about 70 advisors in the country right now that that are certified under those metrics. They've got a pretty high bar. And we are one of only 3 firms in the country that has been certified for 10 years or more. And so this has been something we've been doing for a long time because we know that for most of our clients, they delegate fiduciary responsibilities to us, and going through the third-party audit just helps kind of validate for them, and it helps us make sure that we are following, the very best practices that we see out there. So anytime a certification is done, there's a press release that CEFIX puts out. We actually take that and that renewed certification, we put that in your fiduciary vault. But if any of you wanted to see it or you'd like us to disseminate it, we're more than happy to do so. Tucker, if you'll touch on so cryptocurrencies continues to be a pretty hot topic. Earlier this year, the Department of Labor put out what's called a compliance assistance release for plan sponsors. It is just that. What they're trying to do is say, hey, plan sponsors, those of you that offer a retirement plan that are overseeing them, we're trying to give you some assistance on how you should be looking at and thinking about cryptocurrencies. So I'm going to have Tucker take just a minute on, this is a couple of pages. We won't read through the entire thing, but just have him take a couple of minutes on kind of the message that the Department of Labor put out on this.
Yeah. So it's worth noting that the DOL does not generally give such pointed advice. So whenever they do give such direct advice, it's worth noting. And in this case, they called to attention specifically cryptocurrencies. Maybe just a good summary of what they're looking at here is that last paragraph on the page just how the DOL feels about how early in the stages cryptocurrency is and how there's still so much to learn about it. But they also highlighted 5 specific concerns. Just to go over those. So the speculative and volatile nature, and we're seeing that especially now, given how cryptocurrency has been responding to recent market events. They feel like with how speculative this is, it's still not something that's a very safe investment to offer to people for their 401k and their retirement plans. The challenge for plan participants to make informed decisions. We know with the current environment, social media, news, hearsay, the information that's getting disseminated to participants about cryptocurrency and blockchain and all that technology around cryptocurrency might not be the most clear and can be a bit deceiving for participants to be able to get clear and safe advice when it comes to cryptocurrency investments. Third one is custodial and record keeping concerns. As of right now, it's worth pointing out that no custodian or record keeper offers the ability to house cryptocurrency investments within a 401k or retirement platform. And so that's, we don't know what we'll see, as far as progress there, but right now it's not even available to plan participants.
So maybe just a quick note there. I think we've had quite a few plan sponsors and participants say, hey, I had it in my last plan. And so there are plans that may offer a self-directed brokerage account. That allows the participant to go to the brokerage window and they can buy whatever they want, essentially. So a participant may access it that way if they do that, but in terms of having it as part of an offering in a plan, it does not exist today. So I think that's something we've just tried to help communicate, because I know that we've had participants call and say, why doesn't this plan? The last company I worked at offered Bitcoin in their plan, and that's just not a true statement as of today. So that may likely change, but I think in terms of that, and if your participants are reaching out to you, they have questions, we're obviously more than equipped to handle that conversation and help talk to them.
Correct. Another concern was just valuation metrics on cryptocurrency. Much like the speculative and volatile nature, there's still not an agreed upon way to evaluate this cryptocurrency and technology. And then just the ever evolving regulatory environment, how the legislation feels about cryptocurrency, what's going to happen, how it's going to be monitored in the future. So, just a good summary of all this is that last paragraph there. Just based on these and other concerns.
So this is page 12.
Yep.
It's the very last paragraph. It's kind of
this.
It's kind of ERISA's statement.
Yes, so this is ERISA's statement on it. So they expect to conduct an investigative program aimed at plans that offer participant investments in cryptocurrencies and related products. And so, just as of right now, they view these as very, for lack of a better word, I guess, just not dangerous, but just not the best tools to help plan participants get ready for retirement. And if you do plan on offering it, get ready for more attention from the DOL.
Any questions around that? The only thing I would say is on the Soltis, we have a significant part of our business, more than half our business is retirement plans. And our team that focuses there is obviously this team here, but we also have individual clients, more than $3 billion in assets for individuals. So we do have clients that have crypto. We're looking at it. We have clients that are invested in it on the personal side, where it may make sense there. I'll just let the county know Soltis is not actively recommending Bitcoin or cryptocurrency to any of our clients at this time, but we do have clients that do want to use it, and therefore we've tried to help evaluate and look at ways in which to make it available in the portfolio. So part of the reason I share that is we do have good experience in it. We're watching it. We're looking at it very closely. I think we do feel like we have a pretty good understanding of it, and based on the fact that we are not actively recommending it, probably tells you where we're at. We're not sure of whether or not it's really appropriate or can drive significant meaning in a portfolio. But certainly in terms of a 401k plan or retirement plan, you can tell that the Department of Labor has real concerns around these type of offerings for participants. And, I think for most of our clients, none of them are too excited to jump into something that EBSA has kind of said we're going to be launching an investigative program around if you choose to offer it. So that's kind of been, I think, for Soltis' standpoint as a fiduciary, based on that direction from the Department of Labor, we're not exactly running to try and make this available as soon as possible to participants either. But certainly we'll have that discussion and be in collaboration with the committee and what your participants and employees are wanting. So any questions there? Okay, let's, Bill, are you there? May, see on
Yes, I am. Sorry. Just
Bill,
needed
thanks
to
so much
get
for
off
joining
mute.
us. I think what we'll do, Bill, in terms of the agenda is jump into, if you can jump in, Bill, and maybe give us kind of a high-level economic overview. And then we can go through, as Tucker mentioned, we have just a couple of funds that are on watch to report on today. And then we do have, there's 10 funds that are performing at a pretty high level right now. We'll highlight those real quick. But Bill, do you want to jump in and kind of lead us out on the kind of economic overlook? Or out, excuse me.
Yeah, if you could take me to page 20 of the packet.
You got it.
And my remarks will be focusing mostly on the middle part of the page of each of these different topics. So first off, growth. The gross domestic product, as many of you have probably heard, we had another negative quarter report for GDP growth in the second quarter. It's down a negative 0.9%. That followed a negative 1.6% for the first quarter. So many people, quickly point to that's a recession, 2 straight quarters of negative GDP growth. That is a definition some follow. Technically, or there's a lot more that goes into it. But no question, we're seeing some slowing in the U.S. economy, also slowing in the world economy. The thing that's interesting, if you move down to jobs, we've actually got still robust job growth, which doesn't really fit with a recession. So, as an example, here we're talking about June non-farm payrolls were up 372,000. Well, we got the report for July just this past Friday, and it was 528,000 new jobs. To put in that perspective, if you had 150,000 jobs created, you'd feel like, well, that's an okay month. So 528,000, 372,000 job growth is still robust. So we're kind of getting mixed signals on what's going on in the economy. And then you may have also noted that the unemployment rate went from 3.6% in June to 3.5% in July. So, slowing GDP, but at the same time, we got robust job growth and very low unemployment. Valuations in the equity markets, we've been through, first half of the year was a very significant drawdown in the equity markets, both domestically and internationally. We have seen a pretty strong recovery through the month of July, but nonetheless, we still have negative overall returns for the equity markets year to date. You'll notice here there's a 25-year average price earnings ratio of just under 17 times earnings. We were closer to around 16 times earnings. So we wouldn't say that the equity markets are cheap by any nature, but they have become a more reasonable valuation in terms of where they were, for example, at the end of the year. We were trading at about a price earnings ratio of 22 times then. Interest rates, of course, the Fed is job number one for the Fed these days is to fight inflation. So they've been raising interest rates. The Fed funds rate is currently in a range of 2.25% to 2.5%. That's likely to go higher as the Fed mounts this battle against inflation. Interestingly enough, the longer end of the curve, the 10 years trading at a yield of about 2.8%, that's actually less than what the 2-year is offering. So that's an inverted yield curve. Oftentimes an inverted yield curve does kind of indicate that a recession is coming, if not already here. Inflation obviously has really gotten somewhat out of control. 9% was the latest consumer price index number. We think that we should start to see inflation roll over some. One of the things we've seen, commodity prices have rolled over. So hopefully we'll start to see inflation at least roll over and start reporting lower numbers between now and the end of the year. However, the market is kind of forecasting that we're going to get right back to 2% inflation. We don't really subscribe to that. We think inflation is going to be stubbornly higher, although we don't think it'll stay at these higher levels, but it could be well above 2%, the Fed's target, as we go into, the next 6, 12 to 18 months. I think those who think inflation will come down fast think it's just a supply chain issue. We tend to think supply chain's part of it, but we actually think that kind of very aggressive government fiscal policy and very aggressive Fed monetary policy is the prime kind of culprit of why we have inflation today. And so until, for example, money supply growth starts to slow, we could see inflation be stubbornly high. Interestingly enough, this is all kind of the troubles in the world have led to an increase in value for the U.S. dollar in foreign exchange markets. And then the bottom line here, recession risk. Obviously, the risk of a recession is high. I think our feeling is we will have a recession. Whether or not we're in a recession now or is debatable. But we will have a recession, but we're tending to think it'll be a shallow recession. It's not going to be like a financial crisis type of recession that we had in 2008. The banking system is strong and sound, high capital ratios, for example. So although we see a recession, we think it will be shallow and that, will then be an ensuing recovery. So that's kind of a quick economic outlook there. I'd be happy to turn it over to the committee to see if there's any questions. Okay, Tyler, sounds like maybe we move on to investments.
Okay. Thank you, Bill. If we go down to, thank you, Bill, for that summary, and appreciate you, as always, telling us exactly where the market's going. Let's jump down in here. We'll go into the scorecards. The one thing I'll mention quick is if we look at the plans, there's been a couple of changes. We look at the plans, kind of quarter by quarter, year by year, even a year ago. Couple of, I think, changes just the committee is aware of, but probably worth mentioning is, one is with the shift from, we talked about this in the fiduciary training, from the shift from GoalMaker to the managed account solution at Voya. There's two things that happen. One is obviously that shift lowered fees pretty dramatically for most of the participants that were in GoalMaker. That fee reduction was about 35% or more for most of those participants with that move. Two is the portfolios that the participants are in now are much more customized for each participant, where they're looking at those things, which has been good. I know Tucker and our team has been, they've been working diligently with Brandon and to make sure that those that moved into those portfolios understand the solution they're in, and some of the additional benefits that they're in now. You'll see here on page 25, one of the changes is you'll see a pretty big reduction in the stable value fund from where it was at Prudential. And the reason for that is GoalMaker was run by Prudential, and the stable value was one of Prudential's most profitable products. And this is not just the county, but as Prudential ran that program, they always kept a pretty heavy allocation in that stable value, which was something that we weren't a huge fan of. And as we move to managed accounts, that stable value allocation has gone down dramatically, as you can see that. So it used to be about $38 million. It's now down by $14 million. And that's largely because of those that were in Goalmaker that moved to managed accounts to where we don't have stable value as a big allocation in there. Long term, we think that's certainly a big benefit for those participants to not have, their long-term retirement money sitting in a stable value option. For those participants that are worried about the market or don't want to have market risk, they certainly have that Voya fixed account, which is a very similar portfolio, stable value that they can go in that will have no fluctuation. So the option is still there for any participant that wants to be conservative or not have any exposure to the market. They can go into that stable value Voya account. But that's one of the changes that you may note on the plan asset report. Now, if we go down to page 29, this is a quick summary of the investments. Again, everything, if you look in the middle columns there, quantitative and qualitative status, those are the investment policy statement criteria that we're looking at and reporting on. Everything in green is a manager that we're highlighting, meaning that manager right now is beating their benchmark by a percent or more. So that is a very strong number for active managers. So we kind of highlight that to kind of basically show, hey, for your participants, you've got a good chunk of your lineup that not only is outperforming the market, but it's doing so at a pretty high rate of more than 1%. And then you'll see the two watch categories there. Those are the two managers that are on watch. I'll report on Metropolitan West, and I'll probably ask Bill to weigh in because he actually was just in Baltimore with T. Rowe Price, which is the large cap growth manager, Bill. So, but the Metropolitan West, this bond team, this is a good holding in your plan. This has been a team that we've held for many years. They just barely came on watch on June 30th. So this is the first time in our probably 10 years of using this manager that they've come on watch. As we've talked to that team, organizationally, they're stable. They haven't had any changes at that level that draw us concern or whatnot. And so, they're also, expense-wise, they're lower than kind of the average in this category. And if you go to the very next page, Tucker, there's a full write-up on this team as we've talked to and looked at them. So because they've been such a good manager for so long, I think, we're not, and in talking to them, we're not looking to make that change right now. Again, June 30th was the very first time they've come on watch, and they're not on watch by much, just a little bit out. But our recommendation there for the committee is that we would kind of show some patience with this manager, and they're still rated silver medal ranking by Morningstar, and we would like to retain this fund and see if they won't continue to kind of riding the ship a little bit and bettering those numbers, because we have good confidence in this manager. Questions on that one?
You have any idea why they're stumbling a little bit?
Yeah,
and Bill, did you hear that question? You're probably
yeah. So it's kind of interesting. Historically, one of the strengths of Metropolitan West and their management is they tend to really shine when markets struggle, when the bond market struggles. And it was interesting during COVID. There was a very quick and very significant seizing up of the credit markets. But as you may know or remember, the Federal Reserve came in a very big way and took steps to get the credit markets working again, to the point of actually buying corporate bonds and so forth. And so what that led to was the recovery happened so quickly. That was an environment where Metro West normally is at their best, and that's when they provide their greatest value of being positioned to buy the debt that everybody else wants to sell. And then the correspondingly, when you get the recovery, they do very well. So anyway, that happened so quickly with the Fed's aggressive response. It kind of kept them from being able to take that downturn as a positive for their process. So that's the primary reason why they underperformed. I would note, too, that the underperformance is very modest. I mean, we're talking like 19 basis points. As you look at their 3-year number, they're underperforming by 0.19%, and on their 5-year number by 0.17%. So again, I think that's where they are. We think patients here, they have a management team that's been in place for decades. They do have one of their lead managers decided to retire, but they were a team of 4 and 3 are still there, so we're comfortable with that as well.
Any other questions on that one? Bill, if you'll have you speak to the SIA Large Cap Growth. So it says SIA because as a refresher for the committee, that's a collective that we have with T. Rowe Price. So we've got aggregate pricing where you're getting a much lower price point. I think our price point there is like $250 million position.
What I will suggest is if we go to slide 35, and again, this is the write-up. Some important things for the committee to know. The history of this fund is quite stellar. They have had some short-term underperformance, and in addition to some short-term underperformance, they did recently have a long-term manager who retired and left the fund. We actually visited T. Rowe Price's offices about 3 weeks ago and sat down with the money manager, the new manager for this fund, Paul Green. Paul, prior to working on this fund, Paul was an analyst, but he's also ran communication and technology for fund for T. Rowe Price, that happened to be a top decile performing fund. So as we evaluated this fund, they went on watch just as of March 31 of this year, so it's also fairly new on watch. We felt like this fund deserves the benefit of the doubt for a few reasons. One is the analyst team is totally in place, very deep and strong analyst team at T. Rowe Price to support the manager, Paul Green. Paul personally has a significant amount of personal money invested in the fund, which we like that alignment of interests. Given his track record on another fund, we feel like it makes sense to give him a bit of a benefit of the doubt, if you will, to see how he can do. Again, as I mentioned earlier, his fund was a top decile performing fund. And so for those various reasons, we think that some patience is in order here. But we also recognize that we want to start seeing some trending in positive directions in terms of performance. We haven't seen that yet, but we think given that it's only been on watch since March, it deserves a chance to right itself. The questions on this manager?
So thanks, Bill. I'll maybe add one comment is if old school can be used, but Soltis is, we're still believers in, go get on an airplane and go sit down with the manager. There's a lot you can learn from them sitting in their office that you can't quite get over Zoom or whatnot. So for some of these managers, we still make it a point when we can to get out and go sit down with them. We have a significant client money in there and meet with the people that are, running these portfolios and that over time has proven to work well for us, having a good process in place to do that. So in terms of managers on watch to managers on highlight, right now we're about a 5-to-1. In other words, 2 managers on watch, 10 managers that are on highlight. So I think we hopefully we feel like the employees of Utah County will look and feel like they've got good performing investments. They've certainly, those that have been in the plan have been well rewarded from a performance standpoint as we look at it. So Tucker hit on it a little bit earlier, but I think it's about, on average in your plan, about 1.88% of excess performance. And right now of your active managers, there's passive indexes in there as well. But of your active managers, about 86% of them are beating their benchmark right now. So that's obviously part of our value, is to try and make sure that the quality of investments in your plan are either meeting or exceeding, just what the market gives to your participants and helping them as they continue to save for retirement. So questions on either of those or any of the other investments? Okay. I think with that, before we jump into, we'll see if Bishop, you're on, correct?
apologies. I'm here. Having trouble working the mute button.
Good afternoon, Bishop. We're glad to have you. Bishop couldn't make it here in person today, but he's eager to come out when he can and be able to be in front and face to face. We're excited. Many of you dealt with Bishop through the process as the transition process, and Bishop's actually taken the role where he will be the senior relationship manager for the county for your plan here at Voya. And so, Bishop, we'll turn the time over to you if you want to kind of orient us. I know this will be the first time that the committee will be kind of seeing the plan report from Voya's end. And then, Ralph, I don't know, do you want to have, we don't need to go through we'll cover the expense for implementation. Do you want Bishop to take time at all on the ERISA budget, or would you rather have us take some time with you offline on that kind of new format for the kind of accounting of expenses for the plan?
I don't think we need to talk about that because we talked about that in our last meeting.
Okay.
So I think we're actually covered there.
Okay.
So we can go forward without that.
So Bishop, we'll turn the time over to you to go through that report, and then if you'll just take a quick minute on the expense implementation credit that's there that we want to make sure we touch on.
Sure. Thank you, Tyler, and thank you for having me join you all today with members of the committee. I'm happy to be able to do so. And I guess what I thought I would do, there are actually 3 reports. They are separate by each plan. You've got the 401k plan, the 457 plan, and then the part-time limited plan. Since this is a new report for you and there's a lot of data here, I thought we'd spend the time going through the 401k plan. And I'm going to propose what I would normally do and what I've done for other clients in the past is preparing a summary document that just kind of summarizes some of the key data with regards to participant activity, asset activity, distributions and the like. And so if you don't mind, please give me your feedback, as we're kind of going along. I'll also work with, Tyler, Tucker, Ralph as well, as we come into that next meeting so that we can, kind of fine tune some of the points, but, and then use these documents as backup data for you as committee members too. So, if that's acceptable, I'll follow that path as we head towards the next meeting for the committee. The plan reviews themselves are pretty voluminous, as you'll see. And if you've had a chance to look at them at all yet, the one thing I would tell you is for probably the first 3 quarters or so, you're going to see a lot of zeros. And that is because the data within the updates themselves are based upon, the ability to do some past comparisons. Actually, can you back up just one slide for me, if you don't mind? Thank you. So a couple different things that get shown, but a couple things to highlight for you specifically. When we look at the data, there's a Voya update section, which typically has some information with regards to the company if there are key updates to provide, which I would go over with you anyway. Then you've got the health review section, which starts really on this page, and this is really where you get a glimpse as your plan is going over time as to whether or not there's changes. In the case of this meeting, you can kind of ignore what you see because it falls into that category of having zeros. And because this is a new plan coming on board with us, you're seeing green checks where it's good activity, right? Participant accounts going up, and the red X marks where you've got distributions as an example in activity that's going up that's negatively impacting the plan. Again, we're starting from scratch, so in some cases the plan review doesn't really recognize that. So, but typically speaking, on this page, as assets are going to go up, you see a green check and an orange arrow going up. If you see an activity that's negative in its impact, you'll see that red X, and if it's neutral, you'll just see a straight line across of the category there as well. Going to the next page. This is just a typical statement, a roll-up, if you will, of your plan's activity for the prior or for the current quarter with a comparison to the quarter of a year ago. So as we get a year out, it would make a little bit more sense. From this standpoint, you're just seeing the plan starting with a 0 account balance at the upper right column there, then showing your net balance at the end of the quarter of $145 million in this plan at that point in time. Again, seeing, you know, contributions coming in, distributions going out, loan activity, which is larger in this quarter because of the transfer of assets to the plan. Other activity is larger again too, if this dividends coming in, and then appreciation or depreciation depending on the quarter as it might report. Bottom of the page just shows total plan assets, and that again will show you over prior quarters where you stand. Then as we move on to the next page, you're seeing a similar roll-up of activity with regards to participation in the plan. So number of accounts, you know, closed accounts if that occurs, ending account number of accounts, and then you've got a listing of the number of employees that are terminated with an account balance, as well as those that are terminated with an account balance less than $5,000. So as you're looking at your plan at any point in time to potentially roll out or force out employees with smaller account balances, it gives you an accounting of that there too, so you can get that within a quick glimpse also. Participant account balance right there in the middle of the screen. And then at the bottom of that page, what you're seeing is a breakout of the accounts by age group, so you can look at the cohorts within the plan to see where the bulk of your participants lie. And you'll see a similar statistic like that on the number of pages going forward as well. Please interrupt me at any point if you have questions. Happy to address them. But on the next page, just gives you the details of your deferral summaries, average deferral rates. Really, you're getting a glimpse here of how your plan compares to both industry benchmarks as well as Voya's plans. I guess a cautionary note on Voya's plans, that's all of our 457 business, or in this case, governmental 401k business. So you're seeing everything from a very small plan to a large plan thrown into that. But again, healthy average deferral rates for your plan versus our benchmarks. And then at the bottom of the page, again, seeing that breakout by participants in age groups as to how they're deferring it as well. I think a cautionary note on this slide would be that this is only as it relates to the 401k plan. You're not seeing deferral rates here that are captured across the 401k as well as that voluntary 457 plan as well. So that's the one disconnect that this report has for you. Okay. On the next page, and there's some data that actually isn't getting fed into this right now, and I had a conversation with the plan manager earlier. You are providing to us salary information for all of your employees, and we should be pulling that salary information for all your employees to give you a better sense of how participants are doing with regards to the percentage of folks that are on track to save, you know, or exceed 70% of their income in retirement out of their plan. So there's some factors here that can be fed into this, and I'll look into that to try to improve the statistics that you see later on. But this just gives you a snapshot look as to how participants within the plan are doing from a deferral rate standpoint, percentage on track for 70% income replacement, and then again at the bottom you can see a breakdown of how that 70% or 71% in the case of your plan is breaking out based on Social Security, the DC plan itself, other assets, and pension data also. The next page just gives you similar data with regards to income replacement ratio, projected retirement age is a plan. That lower figure for projected retirement age is a target within the plan and can be changed too. If those of you on the committee have gone into your accounts and played with that, you can actually set your targeted retirement date right within that page, and that will feed into this report. So in some cases, I would say probably at this point, probably not a lot of people have gone in and used that tool at this point. So we may see that number change over time, but more to come on that as we move out with regards to the history of the plan. The next page will show you income replacement ratio by age. which is a really good factor to give you a sense of how people are doing with their savings. Again, it's not taking into consideration any assets that they have in their 457 account if they're contributing to that. So that could boost these numbers a little bit as well. But it does give you a sense on those cohorts by age group, how they're doing for saving for retirement. So I would say, based upon experience in other plans, you're seeing pretty high percentages from that age 51 category downward. And in your age 60, 65 plus, those are probably pretty average to what we see in other plans as well. In the next slide, it will give you a sense of the engagement of participants in the plan itself. And this is where I just spend a brief note talking about the numbers that you see. Say when, for instance, you look at the categories that we have, internet, mobile application that we have, the voice response unit, and then the call center is that far right CSA category. This is showing you total inquiries in that gray bar is how many that we've had in each of those categories within this past quarter. The top line there are the unique participants that are calling in. So although you've had 1,900 inquiries on the internet, looking at people looking at their accounts, that's driven by 537 participants. So you're not getting a true one-for-one accounting. If someone goes onto their account and checks their account 3 times in a day, then it's going to feed that 1,900 number that you see at the bottom there in the gray bar. Moving to the bottom portion of the page, what you see is a reference to the types of actions that people are doing, whether that's through the internet, mobile, VRU, or call center activity as well. And again, that can range from anything from carrying out a catch-up contribution at the top to a rebalancing of the elections at the bottom. And you see a little bit more of that on the next page with regards to the engagement within the tools that are available, actions that they took as well, and then the impact of that on deferral rates as well. So what you're seeing in that center chart related to your plan is that 10.7% of participants that went in and utilized the tool of My Orange Money, for instance, had an impact on their deferral rate during the quarter. Whereas at the bottom of the page, you're seeing a similar result of all the Voya plans as to the impact of both using My Orange Money and the impact they've had on their account there at 9.3%. So just a little bit of a glimpse of your plan versus, our overall book of business within Voya's book itself. Okay. The next page starts through plan activity. So this is a little bit more detailed look at the plan itself on a quarterly basis. And you'll see on the next page, it starts with just the details, similar to what we saw on the very first page, breakout of contributions, distributions, loan activity, other activity as well. A little bit skewed with regards to this being the first report. But what probably the most important thing you can see on this page is, and something that will carry forward is, you'll see a net cash flow by period, which is basically just your contributions minus your distributions, showing you whether or not you have positive or negative cash flow in the plan at any point in time as well. Okay. On the next page, we just break out some of those figures a little bit more with regards to contributions, distributions, loan activity, and other activity. You will get to be able to see in future reports how it compares to prior periods. And you'll also see on the far right a changeover from the prior period as well. So at least you can have a glimpse of how you've done, in this case, year to year in the quarter. On the next page just gives you a breakout of the overall contribution summary for the quarter. So this is the total employee contributions coming into the plan, $500,000 on a pre-tax basis, $126,000 on a Roth basis. And then on the bottom of the page there, you see the employer contributions coming into the plan as well, along with totals for the quarter also. And the next page just breaks out the data with regards to contributions by age group. as well as the contribution counts by age group as well. So you can see how many people are contributing within those different age groups, as well as the average deferrals for those groups also. The next page just provides you some further participation and enrollment statistics as well. Those will feed in a little bit more as we go over time within the plan to give you more data, but at this point it's pretty basic. And then on the next page, participant balance information is shown. And this will show you basically what your overall average participant balance is. As you see that on the far right, on the $97,000 versus the benchmark, which is again all of Voya's book of business in the 401k, governmental 401k space of 49,000 versus your plan. And then at the bottom, you see it kind of side by side by age group again to show you how the overall average account balance of your plan is compared to our benchmark within the book of business also. Okay. Next slide gives you a breakout of the distribution summary as well. So you can see there was a death claim within the quarter that we processed. We have periodic payments going out as well as withdrawals. One of the reports that I would do in the summary document would give you a little bit further information on withdrawals to show you how many are going into systemic withdrawals that people are taking out on a monthly, quarterly basis to support themselves in retirement. How many of those might be single or lump sum distributions that are going out as well. So just give you a little bit of a tracking of that data also. And on the next page, this should be a summary of the loan activity that's happened within the plan. Again, a little bit, I guess, hard to tell what's happening here just based on the fact that we're taking over the plan and pulling it all in over one period of time. So future quarters will show something a little bit more meaningful here. And then on the next page, we're going into diversification. Probably one of the key factors that you can look at within the plan as to how well diversified your participants are within the asset classes that you have within the plan. At the very bottom, you can see that the benchmark for us is 2.8 or 2.8 funds per participant. Your plan is averaging 4.1. So above that and probably more consistent with the fact that you're have used in the past Goalmaker, now using advisor managed accounts. So people are going to be more diversified than you see in some plans. And then in the middle there of the page, you can see the diversification of number of investment options that people hold within the plan there also. The next page breaks that out a little bit more. Typically speaking, anything in that asset allocation class you could ignore because based upon the fact that they're using those models, they typically are well diversified, but in your case, those are single funds. So no issues there. Where you want to be concerned is whether or not someone's 100% invested in the Voya fixed account or stability principal option or a bond. I'm sure Tucker or Tyler could speak to this. There are always stories as to individuals that are doing that and are purposely doing so. So although the numbers can look alarming at times or can be of concern, there generally is a good story behind those occurring. But we can do outreach to those individuals if you'd like as well on a regular basis also. And then the next page gives you some details on managed accounts. Again, managed accounts activities taking place, I should say, as Goalmaker under Prudential. It shows you that you have 937 participants that added the service in the quarter. That's, again, a reflection of the transition. You did have 12 participants that canceled the service. Gives you the total assets at the end of the period there and the percentage of assets within the plan that are reflected within the managed account service itself. And then at the bottom of the page, you can see again the utilization by age group as well. The next section, is included here, the investment review section. It's really just meant to supplement what Soltis is providing you, on a quarterly basis as well, and really there to support you as you're looking at, for instance, I know we have a fund change that we're carrying out for you on the 18th. You can go to the next page, but it would give you a sense of a number of the assets that are invested in a fund, the percentage of those assets that are in the plan, the participants invested in the fund itself. Again, gives you some backup data. So as you're looking at making fund changes or maybe considering some changes within the plan, at least you have this data to rely upon as well. And again, it's all done in supplement of the items that Soltis provides. You can go to the next slide, it's fine. That's just a copy of a performance report, which is available to all your participants. We just run that populates within the report itself as we go live. As you go into the next, I think 4 or 5 pages, there is some market analysis and some information here from Voyant Investment Management that's provided to you. Again, just supplemental information to what you receive from Soltis. And in the very last section, kind of forward a couple slides, there you go. In the communication and education section, typically what will occur here, and the information that's here is dated, but in future quarters, what might show up is, for instance, if we see, for instance, I'll use that reference to investors in a single fund. If that's a statistic that is highlighted within the document itself, and we want to highlight, for instance, a communication piece that could go out to them, that would be in this section, or it might be something else related to the plan. But this just gives us a place to highlight those communication education materials for you here as well. That in total is the report. As I mentioned, there are 3 separate reports. We do break out the different reports. But again, if I created a summary document for you, we can summarize some of this information in one place, make it a little easier, and then you can have this backup information to rely upon as well. But happy to do as you see fit for future meetings. Just would need your guidance as to what best suits your needs.
Okay. Thank you, Bishop. I think obviously I know there's a lot in there. We wanted Bishop just to be able to go through so you guys could see all of that. As he mentioned, there's, what we can do is kind of refine that, summarize it to a little bit more of that, like in the investment section, there's a fair amount of redundancy that's in there that we can do. So I think if either in collaboration with the committee, if you'd like us to get with Bishop and maybe look at that report and begin to whittle it down a little bit to an executive, we can do that. Or if there's anything in there that, or if you all would like to, we can do that as well. I think that's one of the nice things. Bishop will help us work to kind of get that report to really the key pages that you want that we can cover, and then we can even just include the rest of it as supplemental stuff.
Yeah, I think that actually would be, I think that'd be a nice change if you're able to summarize it as much as possible, especially if you can include the 401k and the 457 information. Yep. And, but I guess as we go forward with the meetings, we can I'm sure we can have a sense of what we'd like to see. I think it would also be nice if we could have that in advance of the meeting, sent to the committee members. I think that'd be very good. The other question I thought of while I was watching that, and this is a question for Bishop. Is there a way for an individual participant to combine the 457 and 401k amounts online, and so they can see, the entirety of all their, investment balances?
It shows up now.
Yeah, you kind of cut out at the end there, Ralph, but I think you were saying, is there a way for participants to see a roll-up of all their account balances in one place, right, within the participant website?
Yes.
All right?
Yes.
Okay, yeah. And it should be doing that. When you take a view of My Orange Money, if you had, let's say, $50,000 in the 401k plan and $10,000 within the 457 plan, the roll-up should occur within the primary login spot on the page so that you'll see that in total. Now, if you did click, for instance, on the balance of your 457 plan, as an example, that will take you into a separate instance where you're looking at only that account. But at least at initial login, you should see a roll-up of both accounts into one summary at the document, at the top of the page. but you will still see a separate breakout of the two account balances underneath that for the participants themselves too.
Sounds good. Thank you.
So will we get these slides that we just saw?
Yeah.
Because I'd still like to see the detail if you
Yeah,
could get it to us,
absolutely.
because
Yeah,
there's
we
some
will.
good information in there that I'd like to review.
So normally what we'll do is we'll have them send us that. We'll put it all into one.
Right.
So forgive us this. We got bishops but yes, normally going forward, what we'll do is we'll kind of pull that summary together. And then when we send it to you, our material and Voya's will just all be in one document.
Okay.
Make things a little easier for you, but we'll get this to you.
One of the things I saw that stood out to me was there's only, a little over 500 people that have accessed online based on 14 or 1,500 participants. That worries me a little bit that there's people that, number one, haven't checked their balance to make sure it got over there right. And number two, a lot of people were in GoalMaker and now they're in managed accounts. And I mean, I had the discussion, Brian had the discussion. It's a little tricky when you go in there and see what's happened. And that worries me. There's a lot of participants that aren't aware of what's going on with their account.
Yeah. So I think, we can, the first thing probably is it's a little bit discouraging when you do a transition and you realize how many people don't really pay attention.
Right.
And at the same time, we want to try and help them. So I think part of those conversations, if we need to do a second round of like, hey, we can even look at those that haven't logged in and even work with Voya to kind of target, say, you haven't logged in yet, because they have that information or whatnot. But we can try and kind of push out maybe a second campaign around that of like, hey, you haven't logged in or been in there, like to set up the time to help you and do that.
I think even Tucker and I kind of talked a little bit about that when he helped me, and I know he helped Brian do the same thing, because when we went in there and looked, it was a little bit different, and there is a place where you need to go in there and fill out information on the managed account too to get the most bang out of that. So I think we probably do need to push a little bit to have people go check their accounts. I don't know if you've had any questions in your department or not, but
Yes, we have had a lot actually, and we send them to Soltis, and Soltis has done a great job of I think the issue is, like you said, we just haven't had that many overall as compared to how many employees we have that are involved in the plan. So I
Yeah.
think that's the concern.
right.
No, that's one big push or takeaway from our last meeting, and probably a good segue into the ongoing education efforts. We will be talking with your team and recording a webinar, going over the Voya website specifically, giving a demo. And we can do that as long as we need. If it takes a year, just ongoing meetings like this to catch people at the right time, we're happy to do it.
Ask a question. So I'm not sure if this is directed to Bishop. I think it's more a general question. So on slide 25 of the packet provided by Soltis, from 2021, June 30th, so end of second quarter 2021 to the end of second quarter 2022, the 401k lost over 30 million in assets. Is that all tied to market, or are there other factors that maybe we ought to be aware of that could be reducing those assets?
Yeah, so there's a few things will factor into that. So market will be some of that. Loans, distributions, rollovers, employees that have left or terminated, force outs are part of that. We actually, when we look at those numbers, our team, we're doing a second look at them because that seems a little larger than we would anticipate.
And that's my point. Yeah,
And
that's
I
a
think
big number.
the other part is there was kind of a little bit of delay because this is on 6/30, a little bit of delay in the managed account. When we look at those numbers too, they seem to be a little bit lower. And so I think part of that might be just to feed 6/30. We had a few more assets because there was a little bit of delay on some of the managed account stuff as it came over. So that Tucker and I talked this morning about trying to kind of look at those numbers a little bit different because they seem to be a little bit low. But that difference will take into all those things: the market, any type of loan, any type of distribution, any type of rollover, any type of terminated force out that happens during that period. So
Because just with my lawyer math, I'm looking at 15 to 20% reduction.
yeah.
That's that's pretty high, it seems
Yep.
to me.
Yep.
And then
But the market did go down.
the market went down
Yeah.
quite a bit.
So from June 30th to last year, you had a 20+% decline in the market.
Right.
So I mean, so markets definitely. I mean, it's not surprising to see that number be
Large.
lower. We're seeing that pretty consistently across.
And I guess
clients.
the crux of the question was, besides market, there's not a lot we can do about that always, but is there other things that we as a committee can be looking at to help keep that more healthy and
Yeah.
and eliminate losses as much as we can?
Yeah. So I think the first thing is let us come back and confirm, because
Okay.
there's, like I said, I think some of those, as we look at some of those numbers and the dates, there might be a little bit there. Two is, this is part of the reason we do this, is we run it each quarter to kind of look and see that, and then we'll break it out. Typically in the Voya report, they'll be able to give you, hey, this is what contributions were, this is what withdrawals were, this is what loans were, this is what market appreciation, so we can spend some time looking at all that. We were looking at that this morning as well, and because it's not from a year ago, we don't have the exact numbers, but it's a little bit of what we're kind of digging into.
I had one question in looking, and I don't know if I've got the information right or not, but there was a slide that Bishop showed that showed kind of the percentages of where people would get their money, and they showed the pension amount in there is like a 3%. I don't know. That seems really low to me as far as Utah County people, because I would think they'd get a bigger portion out of their pension, and I just don't know where Voya would even get the information on the pension information.
Yeah, I'm not
He's referring to, I saw the slide too, and I thought the same thing. He's referring to the, they have a little provision here that they kind of show where you're at, if you're on track or not.
Yeah, we went through them pretty quick, and I wasn't sure I was looking at
I
it
think-
right, but
This is Bishop. Can you guys hear me?
Yep.
yes.
Yeah, we can, Bishop.
Okay. I think I know which slide you're referring to. I wish they were numbered a little bit differently, but there is a point where it talks about average plan income replacement, and then it breaks that out. Certain
Yeah.
Social Security, DC, other, and pension. And the
Right.
pension amount was 3%.
Right.
So pension, and again, this is all
That's the
focused
one.
on just
That's
the
the
K plan at this point. But in pension, since there isn't a feed into the plan that gives everyone's pension data, that's the slide. Thank you. Since that number is dependent upon someone feeding that information into it. So within My Orange Money, you have the ability to estimate your pension income, let's say from URS, or maybe even if you had a pension that was going to come to you from another entity as well, you can build that into the model to let that feed the orange dollar bill. So if someone, the 3% figure might not be reflective of what a pension truly is for someone, but is more reflective of, on average, here's what folks are feeding into the tool and allowing us to capture as part of that income replacement. It won't be accurate, a one-for-one accuracy versus what someone's pension might be for sure.
Where are people feeding that in? That's not from the managed account.
No,
Hopefully that
it's
helps,
in
and
the
hopefully you
area.
can hear me.
Voya website.
Yeah, it's on the
Yes.
Voya website under my account. They can go in and add that. So,
Oh, okay.
Bishop, let me just restate that. The 3% you're showing is just kind of the average amount that you see the average participant put in. It's obviously not
Putting in.
reflecting specifically yet what Utah County is at, because it requires participants to go in and actually put in what their pension benefit is if
Correct.
they have one, correct?
Right.
Okay.
So if you only had at this point 25 people feeding that into the tool, the amount is going to be low for sure.
Yeah.
And that's back to that other issue we talked about. We're just not having enough people going in there
Yeah.
using the tools or even looking at their balances and so forth. So
Yep.
education, I
Mhm.
think, is going to be critical.
I think it will be. I think one to look at there, and we didn't mention this. I mean, so one of the things that we do each year, most of the committee members know, is we do a benchmark of your plan versus your peer groups. And Kim was down there. So this last year for 2021, Utah County won what's called our Platinum Award. So we take a look at your plan, we stack it up against your industry, your peer group, government entities, and we look at things like income replacement. We look at participation. So what percentage of your employees are participating in the plan? What's the average contribution? And so the Platinum Award is our highest award. It means that versus your peer groups, on average, your participants are saving on average more than what their peers are. Their income replacement ratio, you can kind of see it here at 71%. The peer group in that one's 40% in Voya's, so you're significantly above that. And then we have your participation rate, so percentage of people participating, and then the amount you're contributing is at 8%. Benchmark's at 7%. So in terms of the overall metrics of your plan, I mean, there's some really good. You guys, there's your plan metric-wise when you look at kind of other government entities, has really good, healthy metrics, and it's one of the reasons that you guys that award was given. At the same time, there's certainly some things that we can do to try and help educate and improve and make sure, especially the transition to Voya is a good opportunity to kind of try and re-engage some people a little bit and help them do that. And I think we're hopeful to do that because that'll help these numbers even increase and improve over time.
That's definitely something we can keep an eye on. I mean, you see right now 298 participants have actually filled anything out. So that might be worth it when we're doing our education to look back at that number in a year. I don't think it'll ever be at 100% of whatever the employee base is, but if we can get it higher, maybe that's just the first place to start.
You just think if there was ever a chance that people would go out and check
Right.
what their balance was is when you move from one plan to the next, because that's fairly critical to make sure, hey, did it get over there? And the tricky part is that we were in a down market at the time. So what left Prudential, it did get over there, but it dropped quite a bit.
Yeah.
Even if you ran a report 2 weeks before the transition happened, it really dropped because I did that and I checked the balances and the numbers that left did get over there, at least in my count. But I would think if there was ever a time that you were going to go check it, it'd be now. So it disappointed me that there were such few numbers there, I guess.
And I joke a little bit, but it is. I mean, at the same time, you're not out of the norm. I mean, we wish it were different. People would be in a lot better shape. I think we see it all the time. Those that are engaged with their 401k, and when I say engaged, it doesn't mean they're going in every day and looking at it, but if they kind of have an idea like, hey, I know I'm getting the match, I know I'm doing this. They're tracking at pretty good levels. And those that never pay attention, we had a participant the other day that called in that had spent, was that
40 years.
40 years sitting in stable value.
Really?
40 years. So, I mean,
Yeah.
and your heart kind of breaks because you're like, man, your retirement picture would look so different had you just at some point logged in and, or just taking 15 or 20 minutes with somebody to help you kind of take a look. So, but that's kind of the ongoing challenge forever in 401k plans. Not to make you feel better. I mean, the numbers that you're looking at is not, it's about what we would normally expect to see.
And I would guess a lot of people are reliant probably heavily on what they're going to get out of their pension and maybe not quite as concerned about what they're putting in the 401k. But
That's the one thing to
I don't
look
know.
at in the report. And Bishop pointed out, the younger generations, the ones that probably aren't as focused on pensions, are putting in enough to get that replacement, right? And so, looking at this on a top-down view, obviously there's things that we can improve, but I think overall it's right where we expect it to be.
But I think we hear loud and clear with you, like, hey, there's, going out and educating a couple times for the transition, and even after, we need to have multiple waves just to remind them it's going to take a little while to try and engage as many as we can. And the more that we can get engaged, the better they'll typically be. So we're eager to do that. Do you want to go through just kind of what we have on docket for the remainder of the year? And I think obviously incorporating what we have, there's some things that we have planned for the remainder of the year, as well as incorporating obviously this idea as well of trying to just make sure we further engage our participants.
Yeah. So just as a reminder, so Soltis is holding their quarterly webinars. We held one back in June, reviewing cryptocurrency, a lot of the same material that we just covered in today's meeting. The why and what of cryptocurrency. It is recorded and available to participants. And then the one upcoming in September will be revolving around insurance. Obviously we're not insurance brokers, but it's more just going over the definitions and who needs what and where. So just going a little bit more into that benefit side on September 8th. We've got, as I mentioned, we're planning upcoming website education for the participants. That'll be held virtually. And then we've got our ongoing monthly meetings with the county as well. And to the HR team's credit, they are doing a good job of cycling us around to multiple different locations. We've spent some time at the Public Works. We've spent some time down at the jail as well. And we're getting some really good feedback there. As I mentioned, the demand is high, and we're getting those meeting slots are filling out almost every time. So just continue to see good progress there. Yeah. I think anything else?
I think from an agenda standpoint, I think we're there. Did you want to take a minute, Ralph, on the credit fee and have? speak to
Yeah,
that?
so I really just wanted to make sure, the committee was aware of that and that how that's going to work. And what that is that when we, set up to work with Voya, as part of the arrangement was a $15,000, credit to implement this with our, essentially with, the HRAS Workday. And we did use more than that actually out of our consulting fees account for a company called Accenture, which is fine. I'm not complaining about that, but the the committee should know that we are going to get this money from Voya and it's going to go back into that account, into the account we use for support with Workday. And I don't think we need to vote on it, but it's more of just an awareness thing. I want to make sure that everyone's aware of that. And I think I got an email, from Bishop explaining that you would, send us a check. Is that right?
Correct, right. We would just need direction from you, requesting that we pull that out. I think as a reminder, during the implementation process, we split the $15,000, 75% towards the 401k plan, 25% for the 457 plan. So it's held in actually two different buckets, if you will, under those plans. But, with your direction, we can pull that amount across the two plans, spending accounts, and then send those to the county.
Okay. Yeah, that sounds great. Does anyone have any questions about that?
So
Okay.
the checks are gonna come here, and then what happens with that money? Is it going into another account?
Yeah, so I essentially give the check to actually PJ here, and she will take that over to the accounting department.
I'll work that out with Natalie. Natalie
Yeah.
will put it back in their 4850 account.
This is just a one-time.
It should be one time, yeah. I mean, it is one time. Yeah.
So what did you mention about Accenture?
That is, the consultant we use, for Workday projects. Just it's something that's ongoing all the time. And so, we use that account for any time we do any work in Workday or any changes or updates in Workday. And we use those funds that we had already set aside for this year's work. And so we need to replenish that with the, the funds for Voya, if that makes sense. So does that make sense?
Yeah, I think so. So basically, Accenture billed the county for the work that they had to do to get Workday up to speed with this, with moving from one plan to the next. So that's why some of these monies are going to pay that bill.
That's exactly right. The integration actually ended up being, significantly more than that amount, but that's what, was essentially agreed upon when we set up with Voya.
Okay.
So we're just, trying to collect that money and essentially apply it to that account.
And that's what the check's going to be coming over to do, is to pay that bill in effect.
Exactly.
Okay. I think I'm clear.
So
Peter to pay Paul.
and that's exactly why I wanted to have it in the meeting, so we can make sure that
Right.
everyone's clear on it and no one has any questions on what that is and how it's being applied.
Okay.
And then I think the only other thing I had was just a reminder that on the 18th of August, this committee is meeting for the RFP on the benefits broker. It's in the courthouse, suite 206, I think, and it's from 9 to 3 now because we added on another company. So we're going to end at lunchtime, but now we're going to start back up at 2:00. So Is everyone clear on that?
So 9 to 3, but there is a break for lunch.
There is a
in there.
break.
Okay.
Yeah, there is a break. It's not straight through.
Okay.
There's 4 proposals that will, that we need to sit through. So I think those are the only items I had on the agenda.
So
Okay.
are we,
That covers the agenda from our end.
okay?
I think our last question is, we typically will do notes and follow-up. Do you want us to just do those and initially send them to you as well, Ralph?
Yes, please.
Okay, and then
Yeah.
we'll send them to you in any edits, and then we can, so we'll send those out. And then we'll get, so a couple of follow-up items from us is we'll get the agenda updated. We'll make sure that Yvette gets added.
I've got the
going
correct
forward.
one pulled up now, so yeah, it's.
And then we'll also work with Voya to kind of get this summary report, and we'll do our best to kind of take a look at that and then include the supplemental, and then whatever feedback you guys have, we can make that, adjust that as needed, so.
And then do you have the minutes from the July meeting?
We'll add those as well.
So just, if you'll just add those, then we can approve those
Okay.
next time we meet. I think that was in there.
Sorry, and going forward, we'll just add any minutes from any of the meetings. So if we might have multiple meeting minutes, if that makes sense, or we can have
Any ad hoc meetings?
Okay.
Okay. Okay.
Okay, is there anything else from any member of the committee or Soltis or anyone online?
Hey, Ralph.
Yes.
In the chat, says you made a post here. Says make sure you never miss a meeting again. I don't think this is really from you, is it? And actually, it looks like the link doesn't work anymore, which is good because I
Yeah,
think somebody was spoofing your.
that's really
your
odd.
account.
That is not me.
Yeah, the survey was asking us to enter our emails and passwords. So
Okay.
kind of strange. I've never seen that before, but now the form no longer works. Google must have taken it down.
So you already sent them all your information, right, Brian?
I was gonna say, so I wasn't supposed to be putting my
Yeah,
password in.
that's right.
Well, I'm glad I'm here in person.
Wow. Yeah, that's very interesting how fast somebody got on and was able to spoof that. Okay, I'll make sure there's a
Yeah,
code on next
yeah.
time.
It was posted at 3:13. I noticed it
Wow.
about
I would have
10
never
minutes
seen
ago.
that. Thanks for thanks for bringing that to our attention. Okay, if there's nothing else, we'll have a motion to adjourn.
So moved.
Second? Okay, all those in favor?
Aye.
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 Motion passes 5-0. Thanks, everyone.
Thank you to all of you. I know it's been a busy year, and I know the move to Voya is a big one, and
Yeah.
anyway, appreciate your great to work.